Welcome! Today we'll solve a cost accounting problem for Superior Company. We'll prepare their income statement, schedule of cost of goods sold, and schedule of cost of goods manufactured. Let's start by organizing the given information. We have selling expenses of $218,000, purchases of raw materials of $267,000, direct labor of $153,000, and administrative expenses of $366,000. The manufacturing overhead applied to work in process is $353,000. Let's look at the inventory balances. At the beginning of the year, raw materials were $52,000, work in process was $38,000. At year end, raw materials decreased to $38,000, and work in process was $33,000. Let's start with the income statement and work backwards. We know the net operating income is $32,000, and our operating expenses total $584,000. The unadjusted cost of goods sold is $663,000. Working backwards, we can calculate that sales revenue must be $1,279,000. Now, let's prepare the schedule of cost of goods sold. We can calculate that beginning finished goods inventory was $50,000. We add cost of goods manufactured of $685,000, giving us cost of goods available for sale of $735,000. Subtracting our unadjusted cost of goods sold of $663,000, we can determine that ending finished goods inventory is $72,000. Finally, let's prepare the schedule of cost of goods manufactured. We start with beginning work in process of $38,000. For direct materials, we take beginning raw materials of $52,000, add purchases of $267,000, and subtract ending raw materials of $38,000. We add direct labor of $153,000 and manufacturing overhead of $353,000. However, we notice a discrepancy here. Our calculated total differs from the given total manufacturing costs of $685,000. In conclusion, we've prepared all three required schedules, though we've identified a discrepancy in the manufacturing costs that would need to be investigated further. This highlights the importance of careful analysis and reconciliation in cost accounting.